America's debt is now over $38 trillion. So, protect your savings with something real. Gold. Sanctuary Metals helps you move a portion of your retirement into physical gold. Tax-deferred and penalty-free. Please call 800-801-6487 or just visit sanctuarymetals.com to get your free retirement defense guide. That's sanctuarymetals.com.
The Larry Kudlow Show. Entertaining and informative on the Red Apple Podcast Network.
So we've done a lot of talking today about Kevin Warsh and the Fed and what that might mean and the outlook for the economy and related matters. And then there's this Iranian story that's unfortunately put all up about $10, but whatever. So let's get some investment advice. How does this story play out? We've got two pros. Stephanie Link, number one, Chief Investment Strategist, Hightower Advisors, Head of Investment Solutions, and Kenny Polcari, Chief Market Strategist at Slate Stone Wealth. I bumped into Kenny Polcari on the first floor of Fox. And Stephanie, I'm so glad you're here. You know I love you. And so give me... You've seen the Kevin Warsh thing, and I know you follow it. You understand all this stuff. What does it have? Does it have any particular impact? Okay, gold and silver crashed and whatever. How do you read this?
Well, it's great to be back on with you and Kenny. So thanks for having me, Larry. I think the market misinterpreted Warsh yesterday. I think the first reaction was he's a hawk. But actually, I like the fact that he has political experience, he has investment experience, he's a very good communicator. I, for one, hope that he pares back all of the communication that the Fed does throughout in between meetings and that sort of thing. I think we get too much news from people that either are voting members or not. But he's a good communicator. He's going to corral the team. He's not a fan of a big balance sheet, so maybe he continues to shrink the balance sheet. At the same time, the banks can increase their balance sheets and release capital. And I think the biggest thing is that productivity is running in his favor. And productivity of 4.9% last quarter, on top of a unit labor cost of negative 1.9, that's a great recipe for the economy and for inflation. And so I think he actually can cut rates. And that was the thing that I heard yesterday that he wouldn't do. And so lower rates, tapering of the balance sheet, lighter bank capital rules, and by the way, the manufacturing renaissance and a decent consumer, I think you continue to see the GDP above trend, and GDP above trend means the market can continue to broaden out. So I feel pretty good.
I think you're reading it right. You're reading it right. And by the way, it's funny, you mentioned the productivity and the unit labor costs. On our show, we talked about that several times. I had Ed Yardeni on. You know Ed Yardeni. He's a very smart guy.
Yeah.
So over 4 quarters, unit labor costs are 1.2%. So that's wages minus productivity. Mm-hmm. Productivity is very high. Wages are going up, and the workforce is earning their pay hike with better productivity. You got a business investment capital goods boom, which helps productivity. All the things. Unit labor costs 1.2%, Stephanie. That really is that's the cost of labor, but it really is, in some sense, the basic inflation in the economy. 1.2%. Okay? So that's going to give Warsh, I think, a lot of elbow room to do what he wants to do. And, Kenny, he can, that gives him, gradually he's going to bring down the balance sheet. That's exactly what he should do. Okay? Right. And he will be able to, lower the Fed funds rate, whatever that means anymore, but there is a Fed funds rate or whatever he's paying. It's really what he pays the banks. He can do that. He's going to have, it won't be slowly, gradually. In other words, the wind is at his back. And one other point I want to make. Steph, if they yap too much.
Yes.
All of them. They yap too damn much.
Yes.
Wow. I'm sorry. So Ken Polcari, dive in. What you thinking?
So I agree with everything you guys said. What Stephanie said, it's all true. And here's where it kind of goes off the rails for me. Considering what she said is all true and the economy is doing really well, does that demand that rates have to go lower? That's my question. And that's where I that's where I have a little bit of a problem, because the economy's doing just fine with rates where they are. Could we adjust them another 25 basis points? Sure, that's not going to. But do I see them going to 2.5%? Not at all. And I think if Trump had his wish, Trump would say, we need another 100 basis points, or Stevie Mearin, we need another 100 basis points. That's what I just don't see, because to Stephanie's point and to your point, the economy is doing really well with rates where they're at. And so I'm in this camp that I think Kevin Warsh was a great pick. I get all his experience. I do all that stuff. But I do think that the market interpreted him as more of a hawk and much more concerned about inflation than he is about the labor market, which at the moment apparently seems to be okay. So I'm in the camp that the market interpreted it, well, okay, we're not going to see any rate cuts under as immediately maybe as we thought we were. They're still on the table, but maybe the market's just repricing the idea that maybe he remains a little bit more hawkish than dovish.
It's I'm just thinking, listening to both of you, it's like there's the dirty little secret is that the economy is doing great at current interest rates.
Right. It's true.
It's like it's a secret, but we're growing the economy at 4% plus at the current rates.
Right.
You might get another quarter or a half.
Yeah.
That kind of thing. You get it down to 3%. Okay.
3%. Yeah, 3%. I think, but I don't. 2.5%. I just don't see it. Not yet.
But here's the thing. We're growing 5.4% according to Atlanta Fed tracker, and we all know we would have probably grown 7% if we didn't have a government shutdown. But what I think, we're doing all that growth without a housing cycle. Can you even imagine if we do get a housing cycle? And it's going to take lower rates. And I think this is one of the main reasons that that the Trump administration obviously wants lower rates, because it is a K-shaped economy. The upper end is doing so well because they own stocks, they own bonds, they own private markets, they own houses. The middle class and the lower class, they don't own any of that. So they haven't seen the wealth effect. And I think that Trump administration, they want to get rates lower so that they can have more participation for the consumer. And that, in turn, if we could get a housing cycle, my goodness, Katie bar the door in terms of the economy, in my opinion. Now, I think it's really, really interesting. I'd love both of your opinions on what the Trump administration is asking Fannie and Freddie Mac to do, because we own them. And if they're going to be continuing to buy mortgages, maybe that's his way of getting rates lower, in addition to, Warsh and some of the things that we've talked about.
Is it, I've thought a lot about this, the housing story. You can't jumpstart. It's a very difficult thing. I'm looking at the mortgage rate, the 30-year, Freddie Mac, 6.10 as of yesterday, more or less.
Right.
Then I'm looking, let me see, S&P 500 home builders. The last 52 weeks, minus 2.5%.
Yeah.
Right. So they haven't done a little better year to date in January. But anyway, it's not that easy to jumpstart it. Kenny Polcari, if you have a thought, buying these bonds, I'm not, it doesn't do it for me. They're trying to get the rates, whatever. The market will determine the rate, but I don't think it's going to have a big impact.
Right. But I'm in the camp that I think all those years that they kept rates at 0 and mortgages were, 2.75% and 3%, it caused the housing market to excel, which was fine. But my argument is leave rates where they are and let the housing market readjust. Ultimately, people that have been in their houses for 30 and 40 years and they're retired, they're grandparents now, they want to scale down, all that stuff. They'll recognize that if they really want to move this house, then there's got to be a little bit more flexibility in the price. My fear is if they force rates lower and mortgage rates lower, it's only going to ignite the housing market again. And so once again, okay, you're paying a lower rate, but it's a higher price. So you're in the same position, whether it's a higher rate and a lower price. you're in the same position. So I'd rather leave rates where they are and watch housing prices come in a little bit.
We're talking stocks. Talking stocks with two of the best. Stephanie Link, Chief Investment Strategist of Hightower Advisors, Head of Investment Solutions, and Kenny Polcari, Chief Market Strategist at Slate Stone Wealth. Kids, I was just going to say before the break regarding housing, if the economy keeps growing, okay, 4, 5, 6%, who knows? I'm very bullish on the economy. If it keeps growing, income goes up. Wages, income, take-home pay, middle class stuff, middle class. And that will give people the income resources to buy a house, a down payment. That's the old-fashioned way. And it helps them, helps their credit to get a loan, to get the mortgage. You just have to have some patience and let this economy run, okay? And Warsh will do that. Right? He will let the economy run. He sure isn't going to stop prosperity. That's my thought. Go ahead, kids. Take it. Run with it. Yes, no, maybe.
Well, I mean, I agree. I think the problem right now is that 70% of people that have a mortgage, it's under 4. And so you're not going to see 4s trading up for 6s, right? So That's the problem on existing. But new home sales, I think you're right. I absolutely think you're right. We all know what we all paid for our first mortgage. It was a heck of a lot higher.
Yep.
So we just have to kind of retrain, if you will. And by the way, just as a side, better growth also helps the deficit problem too, by the way.
Yes. 100%.
Yeah.
Kenny Polcari, gold and silver got whacked. Will they still get whacked or what? I kind of enjoyed it, if you want to know the truth. But what?
No, I did. I did too, because honestly, if you look at the charts, they've just gone parabolic, and really parabolic this year. Forget what they've done the last 2 years, but when parabolic this year, which I thought was really, it got to be a little bit ridiculous every day. Gold's up another $200. Gold up another. What the hell is going on? It's gold. So yes, did it come off yesterday on that news on the Kevin Warsh news? Yes, I think it did, because what I think I think that it recognizes, or it thinks it's that A, it's gotten too far ahead of itself, and B, that Warsh is going to be very, very methodical in terms of how he manages, how he communicates, and how he rallies the troops at the Fed. And so I don't think that it's so much being a hawk, but I just don't think he's going to be. Yesterday's action proved that he's not going to be so much of a dove.
He's not going to be a wuss.
Correct.
Like the current guy.
Correct. And so the Momo guys, all the momentum guys that ran into gold, pushed it higher, they right away they hit the sell button. And then what happens is gold, it takes a hit, and then you start getting margin calls, which only forces more selling. So do I think we could see more selling in gold and silver? I do, but do I think gold's going back to $3,000? No, I don't think that's happening.
Wouldn't it be nice if we just have peace between the Fed chair and the president?
Yeah.
I mean, that to me is such a big, big deal. Like to wake up every day and look on Truth Social and look on Twitter and like the back and forth, of what, the Trump administration, what they want. I understand it, but like, I just want peace. And I think the fact that we have now, we have one of the unknowns was who's going to be next Fed chair. And now that's been answered. That's good. And then you dig deep into Warsh and his background, and then he knows the markets. I mean, look, he's at Duquesne Capital, for goodness sake.
And this is such a great point. We talked about this earlier in the program. Warsh gets along with Trump, okay?
Right.
Warsh gets along with Bessent.
Yes.
Warsh gets along with Hassett.
Yes.
Right.
You're going to have cooperation between the policymakers. And Stephanie is so right. And it's going to make it's going to look better, Steph. And that's going to reassure markets. They're all pals. I mean, honestly, look, I know, me too. All right. Warsh is one of my closest friends. Okay. He and Jane, I mean, I just have to say that you're going to have cooperation, which we have not seen in a long time.
Right. But I think Stephanie made a good point. I wonder if they're going to pull back some of that the communication in between Fed meetings by all the other members of the committee that want to talk, they want to be out there, they want to tell their opinion and cause ongoing confusion, right?
Yes. Yes.
Stephanie, what do you like? I don't want to lose you. What do you like here?
So I changed my tune on energy. So I am now an energy bull. We talked about this last time I was on. I started to buy SLB. I bought some Chevron. Love financials, and the fact that they've pulled back and they've kind of just been hanging around, I think you get a great opportunity. There's no other industry that I follow that's going to benefit more from AI than the financial services sector, and I think those stocks are still extremely cheap. And I do like the consumer discretionary names. I think the consumer continues to consume, Larry, and I think it's so totally washed under the rug about the consumer. Everyone thinks that the growth is coming from this economy because of AI, and a lot of it is, but the consumer is doing their part too.
Terrific. Kenny, dive in. What do you like?
Listen. I've always liked energy, financials for sure. I like utilities because I think utilities are going to continue to be a massive beneficiary of the whole AI boom. So they did well last year. I suspect that they're going to do well again this year. And then of course SMIDs. We've been talking about that, but I think the small and mid caps are going to do well. Look, they've started off. I think the whole month of January, I think they're up nearly 8.5% or something, way outperforming. And so therefore, I continue to believe in the small and mid caps this year as well.
Interesting. Anybody buying bonds? Nobody's buying bonds.
Bonds had a good year last year. Bonds were up 7%.
I know.
You know what? Yeah. The 60-40 rule actually worked last year. It wasn't dead.
Well, it wasn't dead. No, for sure it wasn't dead.
Yeah.
You two are wonderful. You two are just wonderful. And thank you for helping out, as always, Stephanie Link, Hightower Advisors, Investment Solutions, Kenny Polcari, Slade Stone Wealth, two of the best of the best. Thank goodness. We'll take a quick break, and we'll do some money in politics with Liz Peek and Steve Moore, and I'm still Kudlow.
The Larry Kudlow Show on the Red Apple Podcast Network.
America's debt is now over $38 trillion. So protect your savings with something real. Gold. Sanctuary Metals helps you move a portion of your retirement into physical gold. Tax-deferred and penalty-free. Please call 800-801-6487 or just visit sanctuarymetals.com to get your free retirement defense guide. That's sanctuarymetals.com.